From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report this weekend. I'm Tyne Morgan, and here's what's in store over the next 60 minutes. USDA says net farm income is set to rise to the highest level since 2001.
But it is true that we have record direct government payments likely for this year.
That's as bankers and mental health experts warn financial struggles are weighing on farmers and ranchers right now.
Well, I would say it's got to be 75-80% or more stressed than a year ago.
China's buying spree continues as harvest approaches in a hurry for farmers across the Midwest.
When you look at the last 2 weeks and you throw that all in together, we're looking somewhere around 127 million bushels of corn.
And in John's world,
it's not a baby boom, it's a baby bust.
Now for the news, it was a big week of buying from China when it comes to corn. The country buying up more than 1 million metric tons of U.S. corn in just 2 days. USDA Ag Secretary Sonny Perdue acknowledging that purchase on Twitter. That's as USDA is predicting last month that China would import 7 million metric tons of new crop corn. But Forbes report China has already committed to importing over 9 million metric tons. Ohio State University ag professor Ben Brown doing some math for us on just how much U.S. corn has been exported to China and unknown destinations, which could include China over the last 2 weeks.
When you look at the last 2 weeks and you throw that all in together, we're looking somewhere around 127 million bushels of corn just in the last 2 weeks. And so that's really impressive. That is, a figure that when you take that and compare that to, the last couple of years, the last 5 years, we're looking at a 400% increase from where we normally are starting the marketing year.
So why are they buying so much corn? Some experts say it may have something to do with food inflation climbing to its highest levels in over a decade and its first corn shortage in years following several months of flooding. We'll talk about it more in our upcoming roundtables. Well, harvest quickly approaching for some, and it was a great week for soybeans with futures climbing to a 2-year high. Traders saying November beans gained roughly 45 cents last week, and December corn futures rallied around 18 cents. The market's being fueled right now on strong demand from China, as well as some concerns about deteriorating U.S. crop conditions amid hot and dry weather. Well, despite the price impacts from COVID-19, with the lower commodity prices overall this year, as well as trade issues, USDA researchers are calling for farm sector profits to rise this year. This graphic created by the Economic Research Service shows net cash farm income, the orange line, increasing $4 billion from last year to more than $115 billion. That's more than a 3% increase. But U.S. net farm income, the blue line, that's forecast to increase more than $18 billion to $102.7 billion. That would be the highest net farm income since 2001. Farmers seeing a rise in their incomes thanks to part of government aid given to them amid the pandemic. And even though we've seen some price issues this year, a new Ag Economy Barometer says farmer sentiments have improved along with higher prices for farmers. The survey from Purdue University and the CME Group now has a reading of 144. That's a 26-point jump from last month.
The improvement in the barometer was driven mostly by an improvement in the index of future expectations, which rose dramatically during the month of August.
The index of current conditions rose 13 points in August, while the index of future expectations rose 33 points. Researchers say the improvement was supported by expectations for excellent crop yields and nearly across-the-board rallies in key ag commodity prices that took place in August. But the hot, dry weather may be cutting into those yields. USDA saying 62% of the corn crop is now rated good to excellent. That's a 2-point drop from last week. Iowa seeing a 5-point drop in ratings week over week. 63% of the corn crop is now dented. That's a big increase from last year. As for soybeans, 66% of the crop is now good to excellent. That's a 3 percentage point drop from the previous week. Iowa seeing a 6-point drop there. Also, cotton conditions across the country dropping in the latest crop progress report from USDA. Louisiana's crop especially impacted due to Hurricane Laura.
44% of the national crop rated good to excellent, 28% very poor to poor. Compare that to last week. That is a fairly sharp decline in condition when we were at 46% good to excellent and 25% very poor to poor. Louisiana, a bit of a focus there because of the high winds and some of the heavy rain. We did see a very large decline in Louisiana cotton rated good to excellent, 82% a week ago. Current number is 47%.
The biggest cotton producing state, Texas, escaped most of the damage from Hurricane Laura, but that state is still facing drought, and that's an issue in portions of the state that produce cotton. Well, and USDA is expanding its free school meal program to millions of children. The program allows families in need to pick up free food from any convenient school campus, even if their child is not enrolled there. In the past, the program was only offered during summer months. The expanded program allows for free meals to be provided at any time during the day, whether kids are on site or learning virtually. It's estimated that around 30 million children benefit from the school lunches each day. The new school lunch program, launched in March, was due to expire this month. Now it's been extended until at least the end of the year. All right, that's it for the news. Well, September greeting some of our viewers with the chance for frost. We'll have a check with weather with meteorologist Mike Hoffman. That's next.
Thank you for joining us for the Best of Farm Journal Field Days, brought to you by Channel and the new #GrowingAhead initiative sponsored by Bayer. Follow @Channel Seed on Twitter, Instagram, and Facebook to see how local teams have gone virtual to keep delivering solid agronomic advice.
Well, meteorologist Mike Hoffman joins us now with weather. Mike, from drought in August to now talk of an early frost. It seems September is off to an eventful weather start for us.
Well, thanks, Tyne. It has been pretty eventful so far. I'm not sure I see an early frost myself, but only time will tell, obviously. That's just talk at the moment because it would be a little bit later in the month. But it's not talk when you're talking about drought, because it is everywhere now in the western half of the country, except for a few spots. And there's also just a few spots of exceptional drought showing up. You can kind of pick out those darker red areas there. But this has changed dramatically in the last 6 months, obviously. The western third of the country has really turned dry, and the I-80 corridor kind of from Nebraska, Iowa, on into northern Illinois, northern Indiana has turned a little bit drier as well. You can also pick that up on the root zone. This used to be all blue or wet areas through the entire Mississippi Valley, but now we're seeing that area where it's really not. It's still wet where Laura came in, Hurricane Laura anyway, obviously from Louisiana on up into Arkansas and Tennessee Valley, and it's still wet for parts of the northern Great Lakes. Jet stream, here's the way things are shaping up. It's turning cooler briefly even into the western plains there as we head into early this week. There's Wednesday, though. That's going to be some fairly cool air right there. Still hot to the far west and warm along the east coast, but then that slowly shifts to the east, and we'll see that cooler air shifting eastward as well, but it just stays hot and dry in most of the western portions of the country. Taking a look at the forecast then for the next 3 days. Monday's Labor Day, obviously, so we're looking for scattered showers and thunderstorms up in the upper Great Lakes, down into the northern Mississippi River Valley. Otherwise warm and dry through most of the southeast except for Florida. Now this next system is going to be a slow mover. That's that little cutoff that's moving in, so we're going to put that over northern Missouri by the middle of the week with widespread light rain and clouds. Northern Mississippi Valley into the Great Lakes area. Humid through the southeast with just scattered showers and thunderstorms there. Turning a little bit cooler, obviously, into the northern plains for the first time since spring. Taking a look at Friday then, that slow-moving storm into the northeastern Great Lakes. Showers and thunderstorms scattered throughout the eastern third of the country. Otherwise, it is dry to the west. Cool in the middle of the country, but hot in the far west. 30-day outlook for temperatures. I'm going above normal the east coast, west coast, into the Four Corner region, below normal up and down the middle of the country. Precipitation over the next 30 days from Arkansas to the east coast, above normal, below normal for most of the western half of the lower 48. Tyne?
Well, weather recently impacting the markets, but is that weather rally over now as we head into harvest? We'll check with our marketing analysts next.
America's Conservation Ag Movement, a national partnership to help farmers scale conservation for their businesses, the environment, and their communities. To learn more, visit agweb.com/ACAM.
welcome back to U.S. Farm Report. This weekend, joining me is Garrett Toy and Sam Hudson to talk markets. Let's start off with soybeans. Garrett, I'll start with you. We have seen an impressive rally in soybeans, some at profitable levels for folks. Do you think this momentum can last?
We're running up against the clock. I mean, just because it's harvest, and we're going to see at these prices, farmer be fairly active selling beans across the scale. I think beans are kind of on a mission. They're divorcing themselves from the trade war price levels. And it looks to me, you look at a seasonal chart, we're trying to reassume those, 2016, 2017 type price levels for no beans, which suggests that maybe the $10 could be in the cards, but 16 and 17, we really didn't spend much time above $10. So that's kind of your upside targets here. You put that into perspective, we traded to 970 this week. That means if you're pricing anything above 960, you're in the upper, 25% of potential here. But it's hard for me to believe unless we get in the field, see what these yields are surprisingly lower than what are expected to maintain this rally through harvest, unless we have some bigger issues.
All right, Sam, do you agree with that? And do you think that farmers should be looking at 2021 with these prices that we're seeing today?
Firstly, I would agree with what Garrett said in terms of, eventually I think what we're going to do is find a range as we go into harvest here. There's a lot of unknowns when you fast forward 6 months down the road. We know demand's good right now. We're starting to hone in a little bit more on yield, and I kind of view this September report as kind of resetting the bar in thoughts that we've seen the high in yield with the August data. So as we move forward, we don't know what demand's going to look like after the first of the year. We got an election, and I think there's going to be growing interest in the South American crop in terms of their weather situation, especially with the La Nina coming. So I think that's all kind of working into the mix here to say what if. And once we nail down or get in the ballpark on yield, I think we can kind of go in to find that range. And in terms of 21, I think there's a lot on the table in terms of politics there too. But generally speaking, I think it's we've shifted from maybe not a risk of a lot of upside, but maybe mitigated risk of a lot of downside. But I still think the key levels are $4 and $10 for this these coming years. If you can do some some sort of premium offer contracts or something like that to start attaining prices like that, it's a good place to step in.
Yeah, Garrett, do you think it's a similar story in corn? I mean, do you think as harvest rushes in, and we're hearing it could happen earlier than expected, do you think that we could see some additional pressure on corn prices as we head into these fall months?
Yeah, the seasonalities are going to kick in, and it's traditional. Once we find out what the yields are, it doesn't mean that we can't have a post-harvest seasonal rally. It might be more well-defined, but I think the farmers at this point, they've got a better opportunity to market beans that create some cash flow. They'll be more inclined to market, to store corn, which might be a detriment to the commercial, because it seems like the commercial ownership is pretty tight. We're going to have a pretty active export program this year in corn as well for the first time in about 4 years. So, the spreads may not, if you're planning on storing corn, the spreads may not pay you what you think they may, usually, considering the demand off the export market this year.
Sam, when it comes to corn, we know we'll get an updated look at yield and production from USDA coming up in a couple weeks. But do you think that yield overall, does it matter right now to the trade? No matter what USDA says we have or we don't have, does yield matter?
I think it matters to a certain degree, just to make sure that, like I said, we're kind of resetting the bar here. We know that the August data is based largely off of farmer surveys and satellite data, and we know during that time that was probably about as good of conditions or sentiment you could have had. And since then, things have changed dramatically with the derecho in Iowa, to the dry conditions we've seen here at the tail end of the marketing season. But I think, at the end of the day, this crop had so much potential so early on, and it got so far along that it was hard to really hurt it in a big enough way. So I think we just need to confirm that we're in the ballpark, in my opinion, of a trend or, sub 180 type of look here. But I would, start to side with the fact that, what Garrett mentioned on the export side of things, that could eventually overshadow, some of the weaknesses we could continue to see in ethanol. And I think that's something to consider now too, is, even with our production numbers kind of leveling off here on a week-to-week basis in ethanol, our stocks are starting to grow right ahead of harvest, and I would expect that to continue into that time frame. And the export market's really going to have to drive the ship into the end of the year.
So what yield do you think is priced in to the market today? And with these historic buys that we're seeing from China, could it really change the game for prices as we head into 2021? We'll ask our analysts later on U.S. Farm Report.
America's conservation ag movement would like to recognize American Farmland Trust for its efforts in contributing to healthier, more resilient production agriculture systems. To learn more, visit agweb.com/ACAM.
Well, you may have noticed a new addition in our newsroom, this desk, courtesy of none other than John Phipps. I'll have him talk about the inspiration of this desk on next weekend's show. But for this weekend, it's all about the baby bust.
The gold standard for population growth statistics, especially for the world, is the UN. And this is the chart that many of us have lodged in our minds as our most likely outcome. The line to watch is the red one in the middle, the median projection after thousands of computer model runs. While it has been revised minutely over the last few years, the numbers are essentially the same as when I first saw it a few years ago. It is the source of all those alarming articles about 10 billion people that often appear in farm media, along with questions about like, how will we ever feed them? Note it shows a global population in 2100 of about 11 billion and still increasing very slowly. However, multiple other studies have tried to get a better picture of the falling birth rate in recent years. All over the world, even in Africa, women are having fewer children, and many countries are already declining in population, notably Japan, Italy, and much of Eastern Europe. The Lancet, the leading medical journal in the UK, recently published an extensive study that integrated this unexpected and precipitous fertility decline into population projections. They also identified two major factors that drive this decline: access to contraception and the education of women, both of which are rising smartly. The result looks something like this. Similar to the UN chart, the most likely curve is the blue one in the middle. But if you dig into the report, there is this more immediate effect. If both education and contraception become widely available by 2030, which is plausible, the lower curve is the best or worst case, depending on your point of view. In other words, they make a strong case for a population peaking in 2064 or as early as 2040, and not at 11 billion, but slightly more than presently, just under 9 billion. This report is one of many to encourage us to rethink our lifelong belief in a population explosion while ignoring the more likely consequences of population decline globally. Next week, I'll look at projections for individual countries, including ours, and speculate on what the COVID pandemic might mean to the birth rate. And I'll also look at why that matters for farmers.
Thanks, John, and thanks again for this. I love it. All right, when we come back, Machinery Pete.
America's conservation ag movement would like to recognize Valent for its efforts in contributing to healthier, more resilient production agriculture systems. To learn more, visit agweb.com/ACAM.
Tractor Tales is brought to you by Sullivan Auctioneers. Let our team of professionals show you how to make your auction a success. Visit SullivanAuctioneers.com.
Hey, welcome back to Tractor Tales, folks. This week we have a very special throwback episode for you. Lyman Newcomer shares with us his Model Case steam tractor at a show in northeastern Indiana.
This is a Model Case steam 60-horse tractor. It was made between the year of 1910 to 1924. And this tractor was used for mainly thrashing grain and that type work back years ago. I made every part on this with the exceptions of two castings, which was of the governor and the heat exchanger. Everything else was made by bar stock and what I machined myself. Well, I've got 2 years and 3 months so far, but I'm not quite done yet. The boiler was made out of weld casing. The spokes in the back wheels were made out of welding rods, and all the other stuff was made out of bar stock. and stock brass. Well, everybody seemed to have a nice compliment. They seem to think it looks real neat. I'll give it throttle, and I'll make it work, and I want to watch the governor. It sounds like the old ones. You hear the real ones.
What made you decide to do this?
Because I'm a farmer, and I run Case tractors ever since I was a little boy. My father had the thrash machine in the neighborhood, and we used to thrash with an L Case, and we've run Case tractors ever since.
Well, USDA has some hefty expectations for net farm income this year, but some ag economists are saying not so fast. We'll look at the farm financial stress and the mental stress on farmers right now. That's up next in our Farm Journal report.
U.S. Farm Report is produced and distributed by Farm Journal Broadcast. Welcome back to U.S. Farm Report. Trusted, timely, tradition.
Well, last week during Farm Journal Field Days, as several of the discussions center around farm financial stress and mental health. But as COVID continues to impact farm businesses across the country, even with an optimistic net farm income forecast this year, farmers say the stress is mounting. From farm to farm and state to state, financial stress is mounting.
I would say it's got to be 75-80% or more stressed than a year ago.
That's even with the CFAP and other aid.
If it weren't for the government payments and the various programs that came out, it'd be significantly more stressed.
USDA updating its net farm income forecast this week, telling a different story. USDA's new forecast shows net farm income is expected to rise $19 billion from 2019 to $102.7 billion. That would be a nearly 23% hike from last year, and if realized, would mark the highest net farm income since 2001. However, some ag economists caution this forecast is too optimistic and banks on government payments yet to be made.
It is true that we have record direct government payments likely for this year. However, I think that, again, this is a preliminary estimate. We saw them include, for instance, $16 billion of CFAP payments, when in fact we're probably likely to get maybe more on the order of $11 billion out the door. So there's $5 billion on farm income that ERS is counting. And yes, the Secretary of Agriculture has announced CFAP too. But it is unusual to include some vague notion of another $5 billion of payments in that farm income.
Farm CPA Paul Neefer says more aid could be on the way. It's just a matter of when and how that aid is dispersed.
There's another $14 billion approximately that was funded as of July 1st. So there is about $20 billion that's still available. Even if we don't get CARES number 2 or whatever you want to call it, we still have $20 billion that USDA has the ability to disperse how they see fit. Now that's part of the problem, how they see fit. Is it really going to help the people in this room or the people listening on here? That's what we really don't know yet.
While the verdict is still out on net farm income, Purdue University's latest ag economy barometer shows sentiments are starting to shift, with the barometer shooting up 26 points in August.
The improvement in the barometer was driven mostly by an improvement in the index of future expectations, which rose dramatically during the month of August.
Minturn says the improvement in farmer sentiment this month was supported by expectations for excellent crop yields and nearly across-the-board rallies in key commodity prices that took place in August. But as farmer sentiment skyrocket, a look back at 2020 shows the roller coaster ride producers have been on. Sectors facing financial stress span across most acres and most operations.
Probably most sectors, really, crops, corn and beans, and cattle and hogs are all facing it.
That financial frustration is bleeding over into mental health concerns.
Farmers, even in best times, have a very high rate of suicide. And we don't know what this particular time is going to bring, but we do know there are a lot more calls being made to the hotlines right now. So we need some intervention.
Dr. Deborah Reed is with the University of Kentucky. She says entire farm families are feeling the added stress right now.
We are hearing from a lot more farmers in various ways, and not just from the farmers themselves, but from their family members and those children. We can't forget those children on the farms.
Reed says her biggest advice for families enduring that, take care of yourself first.
As stress builds up, you not only have those physical consequences, but you're not able to make decisions, or you make poor decisions. That affects your bottom line on the farm, doesn't it? You have a chronic anxiety, which affects everyone around you. You may actually exhibit clinical depression. And if it keeps going downhill, you could begin to have feelings of hopelessness. Maybe you've even thought of harming yourself. These are very serious outcomes.
Those serious outcomes are what the American Soybean Association and the United Soybean Board are trying to help prevent.
Our Soy Help campaign for farm stress. And this initiative really came from this COVID pandemic, where we saw a clear connection, and our farmers indicated that they were experiencing high levels of stress.
Communications Director for the American Soybean Association, Wendy Brannon, says the Soy Help Farm Stress Initiative was created from a COVID task force that the organizations put together.
We really wanted to go ahead and get these resources out there because of COVID and the stress that people were clearly experiencing.
Brennan says, seeing that need, the group created an inclusive campaign to help farmers reach out for help.
Certainly, we wanted things that were ag specific. We wanted state specific. We have about 30 soybean producing states that are really active in growing soybeans. We wanted resources for them. We wanted national resources for the suicide helplines and those sort of tools.
From social media campaigns to news stories, she says the conversation is continuing with the hashtag #SoyHelp, a conversation Reed hopes continues down the road.
If you're looking at your family members or your friends, I think anything that just seems out of character for them over a period of time. Now, everybody has an off day, but if you notice that this is becoming a pattern, the panic attacks or the anger or letting the farm run down, those are real signs of saying, hey, how you doing? Are you okay? Because this is a tough time for all of us. Giving them an opening like that to mention is just a good way to open the conversation.
Well, we really dug into the farm financial obstacles and how to overcome those, as well as the Soy Health Initiative in the Lifestyle Pavilion. You can still watch both of those discussions on FarmJournalFieldDays.com. All right, we've seen a buying spree from China lately, but is it enough to change the psyche of the market? We'll talk about that with our marketing analysts next. Well, welcome back to U.S. Farm Report this weekend. All right, Sam, we ended on, kind of looking at the production landscape right now, but, what yield do you think is priced into the market at this point for both corn and soybean?
At this point, I think the corn yield is more decidedly under, this 180 number. And I think what the market's going to try to figure out is how far underneath that. And, with some of these late season problems we're having, it may not be until we get these combines rolling until we have a little bit more confidence and honing in on that. I think if the USDA cuts this yield more than about 1.5 bushels from the previous month, it lays some groundwork or a path to the trade thinking, well, small crops get smaller. And I realize this is still going to be a huge crop too, so keep that in mind. But we're going to probably be closer to 15 billion still than 14. And once we figure that out or have an idea or a comfort level of that, we can start focusing more on the demand side, and then potentially just as importantly, the South American growing season.
Yeah, so Garrett, we're hearing from some of the southern states and some of those fringe states that yields could be pretty good. So what if we do still have a record corn yield on our hands? Do you think there is still room to see momentum with corn prices?
This is one of those odd years where, and I hate to use the term fringe states, but the fringe states are going to have very good yields. The southern areas, areas of the Dakotas, except that, I've heard that things have kind of gone a little bit backwards since crop tour up in those areas. Those areas are going to have some pretty good yields. It's the I states that are struggling this year. And I think that the number that the trade is trading right now is under 180. I think it's a 178, 179 type number. I think the worst case scenario, people are looking at the condition reports, love them or loathe them. There are still people that tie crop yield models to those, and considering the declines that we had in crop conditions over the month of August, that, the worst case scenario I think is a 175 national yield, which, if you tie that in and you account for USDA feed residual offsets, and potentially increase the exports a little bit because the program's very good. At the end of the day, the numbers that I'm coming up with are like a 2.2, 2.3 type carryout, which, coming into this, the market was looking at a 2.8, 2.9 potential given crop size. Now we're back to 2.2, 2.3, which means that, it's basically the same kind of stocks to use ratio that we've had the last 2-3 years. And that equates to 360 on-farm average price, and that's exactly where we went to. 363 is the area in East corn where we've struggled against to make new highs. If the market was truly at a 175 yield number, I think we would be higher than now. That's why I'm kind of in that 178, 179 area at the moment.
Okay, Sam, we see these Chinese buys. We see historic buys come, but when you look at the pace, are we on a historic pace, and do you think it is moving the market at this point?
I think it's helping to move the market just in terms of sentiment to keep us thinking that the USDA data, when we look at their current export projections and the pace that they've set, we're matching that at least. And I think actually we're a little bit ahead of it in beans, if I'm not mistaken there. So I think it helps in that cause while we figure out yield and how far that can drop. And I think the trade's going to kind of be a little bit more skeptical of this bean yield just because of the uncertainty there and trying to get those yields all the time in general. So, I think the big question is on the shipment side. Are we going to have the capability? Are they going to have the capability to offload all this, the birthing capabilities, everything from top to bottom? And what do these unshipped sales look like come February and March? And if South America's crop looks good at that point in time, do we, have a risk of seeing some of those canceled or switched down the road? So I think that's going to be the bigger thing long term. And that there again, I think both some sort of range bound action until we can figure out that side of it.
But Garrett, at the pace we're on right now, the added interest from China in U.S. corn, is it enough to offset the losses that we've seen in ethanol?
It's possible. I mean, it depends if it's a one-off deal or not. We've heard all year that they've had some corn shortages. We've seen the auction results there, the domestic state reserve auction results. Selling everything out. There's been some hoarding going on there from the farmer who thinks the prices are going higher. Everything points to that there's some sort of problem there. They've bought anywhere from 9 to 10 million metric ton of corn worldwide, 7-8 million metric ton from us, 2 million metric ton from Brazil, 2 to 3 million metric ton from Ukraine. So they're, not only are they buying something that appears that they need, but they're also potentially fulfilling some phase one trade deal requirements. But the difference is next year this bean rally has swung the pendulum back to profitability for soybeans for next year. The corn acres decline a little bit. If China's around next year and they buy another 350 million bushel of corn, then yes, that absolutely offsets what the ethanol demand is that's being lost at this point, especially when you're looking at a 10% year-over-year decline in total gasoline demand as more kids are getting schooled at home and more telecommuting and things of that sort.
All right, Garrett, Sam, thank you so much for joining me this weekend. We appreciate it. We need to take a quick break and then we'll have much more right here on U.S. Farm Report. Well, this weekend we're traveling the countryside with Andrew McCrae of A Tale of a Teacher who had a vision that turned into one popular song.
In the late 1850s, music teacher William Pitts was waiting for a stagecoach in Bradford, Iowa, on the way to see his future wife. He walked down the road and came across a beautiful area and penned a song.
Saw the property, there was nothing on the property, no buildings, just saw a beautiful little valley, and wrote the lyrics to Church in the Wildwood, a little brown church in the Vales.
Pitts wrote of a little brown church that did not exist at the time. He simply saw the spot and thought the place as perfect for such a structure. A few years passed and a church was eventually built at the spot, but the congregation knew nothing of Pitts' hymn.
The congregation apparently was so poor that they couldn't afford white paint, which most country churches are painted white. So they either couldn't afford it or couldn't find it, so they eventually went to a company in Ohio and got this brown paint, which was pretty cheap, and plastered it everywhere.
Today, Drew McComb pastors that little brown church built in the 1860s. He says Mr. Pitts returned to the area to teach music at a nearby school and was surprised to find a little brown church on the spot he had written a hymn. He shared it with the congregation, and it became a special song for that church. While the hymn was known locally, it was the Weatherwax brothers from nearby Charles City that began singing it in the early 1900s.
I think there were 48 states at the time, and they sang the song in every state in the union at that time. And then after that, everybody, picked it up, and Andy Griffith and Dolly Parton and everybody, so Statler Brothers.
When famous artists began singing that hymn, the popularity continued to grow. The hymn, of course, has special meaning at this church.
It's the last song every Sunday morning that we sing. And on the third stanza of the song, somebody, usually a guest or maybe celebrating a birthday or an anniversary, gets to ring the church bell on the third stanza. So that's been going on since, I guess, 1860 or whenever.
And when weddings are held here, Church in the Wildwood is always the recessional hymn, and the newlyweds ring the bell. This has been a very popular place to say your vows for well over a century.
Over 76,000 couples. My record so far is 7 couples in one day, but the actual record is 27. I think it was during the war. And I don't know how they managed to get 27 weddings in, but that's the record. So.
Whether Sunday services or a wedding ceremony, this church continues to meet the spiritual needs of its congregation. A church made famous by a hymn written before it ever existed. Traveling the countryside in Nashua, Iowa, I'm Andrew McCrae.
Thanks, Andrew. And remember, you can travel the countryside with Andrew McCrae by visiting AmericanCountryside.com. All right, well, we know the impacts COVID had on ethanol, but some ethanol plants are making a big switch. John has customer support next.
If not fuel, why not make sanitizers?
Well, during Farm Journal Field Days last week, the CEO of a major ethanol group said COVID caused ethanol to lose 2 billion gallons in demand. But some ethanol plants were nimble and made a quick switch. So could it be a long-term solution? Here's John Phepps.
Tom Ashbacher asks about other markets for ethanol. Any chance the idle ethanol producers can start making some hand sanitizer compatible alcohol? That's a good question, Tom. Please send me your address. Now, this idea popped up earlier in the year in ag and general media as ethanol plants began to shut down due to lower demand for gasoline and fuel. As usual, any industrial switch like this has multiple moving parts. First, the size of the hand sanitizer market. They are roughly 70 to 75% ethyl alcohol with the balance mostly glycerin. Now, hard numbers on the number of gallons of ethanol needed are available from the industry sources, but only via very expensive market data firms. However, there are several public forecasts about sales volume, the most optimistic of which is a global sales growth to about $2 billion by 2026. Now, if we use a typical Amazon retail price of $30 a gallon, that equates to an ethanol demand around 500 million gallons. Now, this is global, remember. Annual global ethanol production is about 30 billion gallons, roughly half of which is American. The sanitizer market could thus grow to be about 2% of fuel ethanol production. These numbers are inexact, but should give us a framework. So the first problem is the relatively small size of the sanitizer market. There are other obstacles. Ethanol for fuel is industrial grade and can contain some trace impurities that aren't a problem in engines. Not so for consumer products, which require a more refined and purified version called pharmaceutical ethanol. Upgrading even a small plant to this higher standard is expensive. It is much more likely that beverage ethanol producers could switch to supply sanitizer demand. Meanwhile, gasoline demand is currently showing some signs of recovery, so ethanol producers are facing a tough decision. How long and big will this new market be? What if a vaccine gets us back to normal fuel ethanol demand in a year or so? Add on top of that the impact of oil prices, corn prices, and the usual ethanol production economics, which have been pretty sad for some time. Finally, the sanitizer ethanol demand already has existing specialty ethanol suppliers who probably won't give up their market share easily, which clouds any profit forecasts. So my answer overall is yes, plants could make the switch, but it would be expensive and wouldn't replace much demand and almost certainly would be at best a short-term, low-profit alternative.
Thanks, John. And remember, if you have questions or comments for him, you can email him at mailbag@usfarmreport.com. All right, when we come back, farmers along the Gulf Coast are still trying to salvage and clean up what they can. But it wasn't the hurricane that did most of that damage. It's what happened after. We'll tell you about it in From the Farm next. Well, farmers along the Gulf Coast are continuing to farm on even after a disaster.
About 3, 4 o'clock yesterday afternoon, the surge came in. We thought we had it. We thought we had it whipped, and at 4 o'clock it came in, and it came in with a vengeance. Not quite as bad as Rita, 4 to 5 foot, but now we're faced with challenging efforts to remove the water from inside our levees and amongst our newly planted cane. First things first, we had to go ahead and make sure the water receded our levees, and it has done that this morning. We cranked up our pumps, we busted levees, and we're moving water out. The tide is working with us, but it's going to be a long road ahead. Several million gallons of water that's on several thousand acres of land, and not only on our land, but where our farm's located, the city of New Iberia and the parish drains here to the bottom. We're at the lower end. Really good farmland, but low land that holds water, and it's next to the commercial canal and the coastal canal, and it's set right in the industrial sector of the port. Most of our land that's flooded. So we're faced with challenges with debris that is floated in our crop. That's going to be problematic for the harvest season with butane bottles, logs, and other debris. But currently, we're doing everything we can to save the crop. And people don't realize, but we're looking at the 2020 crop that's due to harvest in 30 days, and 2021 crops 95% completely planted.
He says they now just need things to dry, and they need some nice cool fronts to help them out. He hopes they will be fine for harvest season, but he says there's still a lot of ifs right now. While we're thinking about all of you right now. That does it for this weekend of U.S. Farm Report. Thank you so much for watching. Be sure to join us right here next week as we work to build on our tradition. Have a great weekend, everyone.
U.S. Farm Report is produced and distributed by Farm Journal Broadcast.